Hello, good morning everybody. This is J-Dub here. Wanted to give you an update as to the previous video that I sent you back in August talking about deflation and what I believe is going to happen. And some of the things that have been going on since then. Obviously the markets have moved up, but I think it's towards the last legs of a bear market rally. And as a matter of fact, some of the things going on are the markets are beginning to line up and become in sync. And that is something that is synonymous with deflation, where, for example, if you take all the markets like gold, silver, oil, stock market, and the value of the dollar, they're all starting to breathe in and out at the same time right now. And so that is one symptom that deflation is at our doorstep. Because if you recall from last year, when the prices dropped significantly, everything dropped at the same time. Really the only thing that went up was the value of the dollar. And so right now they're starting to breathe in and out at the same time, which is symptomatic of deflation. And if you recall from the previous video, the reason that deflation was going to take hold was because people are up to their eyeballs in debt. They've had enough, they've seen some job losses, they're scared that they could become a part of that, or they want to conserve their cash. And so as they do that, deflation starts to take hold, and the prices begin to drop as a result of that. The stock market, the value of the goods and services, because there are so many goods and services out there, that those begin to drop. And one effect that we're seeing of deflation is a couple of weeks ago, in early September, they came out with the consumer credit and the aggregate of the United States folks, how much credit that we have basically on our personal balance sheets, and it dropped by nearly 20 billion, which is one of the largest drops in many decades. So not that that is going to create this market collapse, but that is just a symptom that deflation is out there and looming, and that it's going to go ahead and ultimately win this battle. So unfortunately, we are on the doorsteps, we're on the edge and the ledge of a very historic moment here in the United States. And really around the world, where prices are going to probably drop. What was months and weeks away is now becoming more like days, could perhaps even be hours away. So the reason I want to send you this email or this message is to make sure what you can do is, obviously you want to raise cash, sell what you have or what you can to convert it into cash. Dollars are going to be very hard to come by. So anything that can be turned into cash, you'll want to do so. Secondly, obviously you're going to want to exit the market. If you're in the stock market, you want to do so now while we're up towards the top, instead of waiting for the market to drop a little bit and then everybody stampeding for the exit. So raise cash, reduce debts. If you got a 401k, maybe you got that through a company, and obviously you really can't get your hands on that without a penalty. So that could be one option. Or the other option is you basically sell out of any stock mutual funds that you may have within that company 401k and convert those funds into more of a U.S. government T-bill or some type of cash fund. That way you're taking it out of something that's risky, moving it into something that is going to be a little more safe. Doesn't mean it's going to be ultimately safe, but just on a relative basis it would be safer. Much like a house that doesn't have any type of security system versus a house that has a high-end alarm and burglar system. The house with no security obviously is at high risk of getting broken into. A house with the high-end burglary system still has a risk of a thief coming in and stealing and destroying. But that risk is much less relative to the other house. So that's basically what we're talking about here. There's still a risk of loss, but that risk is much less. And then the last thing, if you have any life insurance, if you have any cash value within life insurance, you want to consider cashing that out as well, because all the life insurance companies invest in the same things that you and I do. They're going to have in bonds, corporate bonds, municipals, maybe some in stocks, and so all those things are going to have a very difficult time here through the course of this reduction in prices. And at the same time, people who have other cash value life insurance policies with these companies are going to be hard up for cash, so they're going to want to redeem their policies, and they're going to want to basically receive that cash So these life insurance companies are going to be extremely stressed, and so you want to kind of beat everybody else to the punch and go ahead and take your money out, because everybody else is eventually probably going to do so, and that's going to severely stress these companies. So there's a couple of things that you could do. You want to raise cash, reduce debts. If you have a 401k plan, convert the stock mutual funds into something that's more safe. U.S. government T-bill, would be one of the safer. Anything that's cash related. And then if you have any cash value life insurance, consider going ahead and surrendering the policy. You can go out and buy a term policy, and then you would save less in your monthly payments. You'd also have a little cash out of the deal as well. So we'll continue to provide some updates and see how this unfolds, but like I said, it looks like we are within days, possibly within hours of it's slowly starting to siphon off. And then after it begins to siphon off a little bit, it'll turn into a mad rush for the exit. So you want to make sure you're well out of the way of the stampede. Thanks again for listening. We'll talk to you soon.